Hello and welcome to Freeman CPA YouTube channel. I'm Angela Freeman and I am an enrolled agent with the Internal Revenue Service, which means I'm qualified to represent taxpayers before the IRS. And I am here to share some information with you. Some of it you may have already have and some of it may be brand new to you. So today specifically I'm talking about S-Corp owners estimated taxes. So are you an S-Corp owner? Today I'll tell you everything you need to know about estimated tax payments and what it involves. At the end of this video, I'll share a strategy that we use here that you probably have never heard of, so stick around. Now, if you're an S-Corp owner, when you first formed your company, you received the notice from the IRS once you elected the S corporation status. And that notice basically informed you that you're expected to run a reasonable compensation as the owner. So what does that mean? Well, that means that you're running payroll for yourself. You're getting a W-2 at the end of the year. And that means that the IRS will be looking out for and expecting you to have a reasonable compensation. So it's a requirement, right? So we have your W-2 income, and with this W-2 income, your paycheck, what you are usually seeing is some taxes withheld. So we're gonna have a federal withholding tax. That's the income tax. You see that when you file your 1040, you see the taxes that you owe. That's that federal withholding tax taken out from every paycheck. What else is taken out from your paychecks? Well, you probably have seen Social Security and Medicare taxes withheld. Those are known as FICA taxes, right? So we have this. That's the first portion of you being the S-Corp owner. You're an employee of the company, you run a reasonable compensation. How do you determine reasonable compensation is a whole separate segment, and I'll put a link. We actually talked about it a little bit before, but basically you have to see what your services are worth, and you have to make sure that you're paying yourself for those services. Of course, you also need to keep in mind that your company should be able to afford that, and if you can't afford that, then there's ways around that to see how much the company can afford. But that all goes into that reasonable compensation. So you're paying your taxes, you're paying your Social Security and Medicare, also known as FICA. You're all set, right? That's all you need to do? No, that's not everything. There's something else to this equation. Specifically, there's a profit equation. So, what's profit? Profit equals your gross sales minus your expenses. Make sense? That's where your company is profiting. Now, expenses include things like W-2 expenses, wages for employees. Expenses include everything else that's reasonable, that's required to run your company, right? And what's left after your sales is hopefully some profit. Well, as an S-Corp owner, you will be paying taxes on this profit. The way that works is an S corporation is a pass-through entity, meaning it files a tax return, but it's informational. It tells the IRS what types of income the company has generated. It tells the IRS who the owners are. And it tells the IRS that the owners will pick up this income on their personal tax return. So when you prepare a business S corporation tax filing form 1120S, part of that form is going to be K1. It's kind of like W-2, but for business. K-1 lists out all the information you need to know in order to prepare your personal return as the business owner for that section. It lists out all the income, the profit. And there's more to it, but that's basically the main theme of this, is that you'll be reporting all of the corporation's profits on your personal tax return. Guess what? All this profit has not been taxed. That's right. So your company is operating, you're running the company, you're getting paid for it, you're paying taxes, you think you're good, but you actually have additional profit. So after you've paid your W-2 salary to yourself, to your employees, if you have other employees, to all your other expenses, and you're left with this profit has never been taxed. Now, it doesn't matter at all whether you kept the profit in the company, in that bank account, or if you pulled it out. It's taxed regardless. So just saying, well, I kept the money in the company, doesn't matter. That's still taxable to you because we're taxed on our profits, not on our distributions. So, and that would be a whole other topic. So what do? Well, since it has not been taxed, we're gonna need to pay some taxes on this now. One thing to note, as the employee, you're paying these 3 taxes, right? You got 1, 2, and 3. Federal, Social Security, and Medicare. There's also the employer component to that, but basically FICA is what we're paying. Well, on the profits, we're only paying 1 tax, federal withholding tax. We're not paying FICA, so we're saving some tax money there for sure, and it's often a tax planning opportunity. But the federal withholding tax has never been withheld. So what you're expected to do as a business owner, as the owner of the S corporation, is to make payments as estimated taxes. Now, estimated taxes are due quarterly. And it's not exactly quarterly, but it's 4 times a year. The dates are 4/15, that's April 15th, first estimated tax. So for 2021, when was the first estimated tax due? April 15th of 2021. You've been in business for the first 3 months of the year, January, February, March. By April 15th, you're sending out your first estimated tax payment. The next one is 6/15. You'll notice it's not really 3 months later. It's 2 months later, but that's the IRS. June 15th is the next payment, and you're paying estimated taxes on April and May. Then we have 9/15. So 7, 8, and basically 6, 7, and 8. Excuse me. June, July, August. We're paying in September. When's the last estimated tax payment due for the remainder of the year? January 15th of the following year. 1/15 of the following year is when we're paying taxes for September, October, November, and December. Now those payments have to be made. You should estimate how much you're profiting, and you should be sending out estimated tax payments based on your profits in that corp, and everything else that's going on your tax return, and sending those out to the IRS. Now, it's not a simple calculation always, and we have a separate video that I'll also link below on the estimated taxes, but something to keep in mind is that we're only paying taxes on our federal income tax, and when we're calculating these, it's not just on this K-1 income. We're looking at your total Form 1040, everything else that's going on. You have withholdings from your W-2 paycheck. You have investments, maybe in securities. you have maybe rental income, you have kids and credits, you have a spouse that maybe overpays or underpays or doesn't work. All of these things affect how much estimated taxes you will owe. So it's not a straightforward calculation, it's kind of hard to tell. Plus, we're looking at these as the year changes. So maybe you were really just taking off in April, and the first quarter of the year you didn't make much. But then by the end of the year, you were rolling in dough. You were really making some good money. Well, how can you estimate how much to send in? It gets complicated. And sometimes people just kind of forget and don't know what to do, and this doesn't happen. So, what are you going to do? Well, there is an option, and that's something that I wanted to go over with you. So, here's the option that we suggest, and this applies only for our S-corporation owners. So remember how we were talking about your W-2 withholdings? So with these federal withholding taxes, doesn't matter when you run your paycheck during the year, sending out federal withholding taxes is considered taxes paid ratably during the year. Let me write it down. They are paid ratably. So, what does that mean? That means that it's considered timely. If you missed your April 15 first estimated tax deadline and you owed taxes for that first quarter because you were profitable that quarter, you will potentially get penalties. If you end up owing more than $1,000 overall on your tax return, you will get penalized for underpayment of estimated taxes if they were due. However, if you're to send out federal withholdings through your W-2 at any time during the year, it's considered paid timely. So what's the strategy that we recommend to our S-Corp owner clients that have unpredictable income for the year? They don't know how much to send in, or for whatever reason, estimated tax payments were not made. What we do for them is before the end of the year, we do a tax plan, and we determine, well, how much taxes will you owe? And once we know how much tax payments you will owe, how much you will owe, we put it through the W-2. We put it through your paycheck. So before the end of the year, before 12/31, what we do is we run a payroll just to withhold taxes, just to reflect that. Let's say we figure out it's December and we looked at your financials and we're telling you that, hey, by the way, it looks like from the tax projection with everything you gave us and everything that's going on your tax return, you're going to owe $5,000 to the IRS with your tax filing. What do? We send out this money before December 31st through your W-2. That makes it timely. And what that does is it eliminates the need for estimated tax payments. All we need to do is send it out as federal withholdings taxes. So that's the strategy that we employ.